So demand continues to increase, supply continues to increase. Let me be fairer about this. So supply is increasing, steadily increasing supply. Now look what happens. Well, in essence, this point up here would be best described as saturation. In other words, the demand is leveled off for whatever reason. And I'll give you an example. My mom got caught up in the Beanie Baby craze, and at, of course, the height of the market when the demand was at the peak. So this is peak demand. So at peak demand, it seems like everybody wants to get into Beanie Babies. My mom's in it. Her friend James is in it. They're buying them on eBay. You go on eBay and it's the bestseller. It's all over the place. It's in the news. It's in Forbes. It's in Fortune. It's in The Economist. Everybody's talking about the Beanie Baby craze. On CNBC, they've got the Beanie Baby craze. The Beanie Baby company is talking about going public. Okay? Now, here's the key. We don't know that it's peak demand until it's already happened. Okay, so in other words, you can't look at the demand and supply lines and start to say, oh, well, demand is peaked. Because you might say, oh, demand is peaked over here. Or, demand is peaked over here. You can't say that. Okay, the only way to know is when demand goes sideways and starts to move down and supply is continuing to move up. So you have peak demand at the saturation point, which you're not going to know until it's already finished. Okay? So once the market has reached this saturation area, what inevitably happens is the suppliers are continuing to crank it out. Now, part of this is because the suppliers are in general optimistic, they're forward-looking, they are reacting to demand all the way back here. So at this point, the suppliers are reacting to the market weeks, months, quarters ago. So because they're reacting to something that's happened in the past, and they're not focused on what's going on now, and some of this is because it's difficult to have an accurate idea of what's going on now. Let me give you a little side story. The reason why Walmart is so successful in a lot of ways is because of supply management. They manage supply. If they see that demand is falling, they can move their supply. Walmart is successful because they have managed the supply-demand equation. Anybody who's in the supplier role, if they can manage or somehow actively monitor the demand of whatever it is they're selling, they will have the keys to the kingdom, which is why Walmart is a, $300 billion corporation. So supply is outstripping demand. Okay, remember the Beanie Babies are flying off the shelves, the supplier cranks everything up, and they just keep cranking. Well, at some point during this whole exercise, there's a big discrepancy, and this would be a worst-case scenario, where demand is way down here, supply is way up there.